Hello, master traders and money magnets. 2025 has been a great year of trading so far. If you are a sheep style trader, day trader, all that happy stuff, volatility has returned to the stock market, and Uncle Charles is happy as hell. Guys, this is like day trading paradise. There's so much setup, so much movement lately in the market. It's so tradable if you have the experience and the patience. And look at that. Look at the VIX. I have not covered the VIX in such a long time. And you can see the VIX hitting levels it hasn't hit in months. And I'm very happy to see volatility is back. The VIX is popping up. This is great stuff, guys. As far as how we trade it, yesterday, as always, we traded using the levels, level to level style, sheet style, which means we traded to the upside and to the downside because there is so much trading opportunities. There's an abundance of setups throughout the day. If it's not with SPY, with Triple Q, or any other ticker symbol you can name. But with this, we had plentiful with the SPY. Okay, now let me take a look at my Discord. Okay, I wrote in the first post of the day. Yesterday's intraday bounce came with a false breakdown of the 575 level. To be bearish, that level must fail to put lower targets in play, 573.5, 572, and so on. If 575 defends as support, 577 must clear to put 578.5 and 580 in play. First setup of the day we had was right here. A breakdown of the 575 level. And what does Uncle always say? You want to play it level to level because look what happened. This is why I always say level to level. Broke down 575, hit 573.5 is level next, right below it. Level to level. Now, for some of you guys might be thinking, Uncle, that price action happened too fast. What do you do when the price moves too fast and you miss entry? You reset for the next setup. You always got to think with an abundant mindset when you're trading. There are so many setups. There are so many trading opportunities. It's crazy throughout the day. If you know how to look at the charts, you know the levels and all that happy stuff, you will see that there's an abundance. So even if you miss one setup, don't catch FOMO. FOMO is the mindset of scarcity. You think you're missing out. You know what I mean? It's going to be another setup coming. So if you miss it, don't catch FOMO. You wait for the next setup because it came in the form of a false breakdown setup. Once again, just like with Wednesday's price action in the morning yesterday, it recaptured 575. It even recaptured 577. Remember, I write all these levels out throughout the day. Okay, throughout the day, and just so you know the levels and stuff. But once we cleared 577 right there, it smashed 578.5. It smashed 580. Level to level style works, guys. It's incredible. Now, what happened from there? What happened from there? Uncle wrote in the Discord. If you played the false breakdown of 575 or 577, please take most profits as close to 580 as possible and leave a runner. From here, this is important. From here, trust no rejection unless it's strong enough to break down 578.5 and 577. If 580 clears next, 582 and 583.3 incoming. So whoever played the breakdown of 575 or 577, I mentioned and recommended take profits as close to 580. It smashed 580, but take profits there and leave a runner. This is the reason why. Because once the target is hit, we don't know what's going to happen next. But I do. I know what's going to happen next. What's going to happen next? Another setup is going to happen next. I don't know what the setup is, but I know it's going to be another setup. And that's exactly what we got. Hit 580, and I mentioned you don't want to short unless 578.5 and 577 fails as support. And you guys see 15-minute chart, like I say all the time. Broke down 578.5, broke down 577. You see that setup? Bing, ding, ding. Time to enter puts, baby. Or you can enter puts as it dropped. It depends on your experience and comfort level. But when you see that setup, that's when you want to enter puts. Enter puts, and boom, look at that drop to the downside. All we did was know the levels, know the setups, and we traded unbiasedly, level to level style, to the downside, to the upside. It doesn't matter. get your P&L in the green. It was an incredible trading day. And as long as there's volatility, we are going to continue to get moves like that, level to level, and sometimes even more than level style moves. There is so much money to be made. You follow the price action and the money will gravitate towards you like it can't help itself. Amazing. Money magnets. What is the plan next? Well, I tell you this. Ever since we had that false breakout back on February 21st of that 609 level, and we broke down that uptrend line, Unco has been bearish. And when we broke down that 50 DMA, Unco continued to be bearish. And when we continue to break down those support levels, the big critical level was 583.3 when it was down here. It rejected multiple times as resistant, pushing SPY eventually down to the 200 daily moving average. Well, what's the next big key level now, Uncle Chartist? 575. Okay, it was a pivot low back in mid-January. Remember about the M pattern, the big old M pattern I'm talking about? If there is a big old M pattern to be playing out for us, it needs to keep price below 575 to stay bearish. Guess what? We broke that level down yesterday, and we went and tested the 200 daily moving average. Something SPY hasn't done since late 2023. So it's been a while. And here we are once again. The big critical level being 575. The same way 583.3, the 50 daily moving average, all those happy levels. That is the new key level to watch. What does that mean, the key level? That's the most critical level to watch because it's a fib level. It was a very strong buy zone back in mid-January. Now, all that buying pressure that it had back in mid-January, we're not seeing it right now. Okay? So as long as below 575, Uncle Chartist will remain bearish. And bearish follow-through would be to break down that 200 daily moving average. Okay? So below 575, I have a support at 573. And then the 200 daily moving average, which is around 571.6-ish as of right now. And then the tough buy zone at 570. That level held yesterday. Okay? So if we are to be bearish, first thing, price must stay below 575. Second thing, break down 573. Break down that 200 daily moving average. And if they can, break down that 570 level. And third thing, if we break down those levels, we will stay bearish with 565 in play. Before 565, I have 568 en route first and then 565. That is the bearish case scenario. Now, the bull case scenario, as always, as usual, we want to play the odds in our favor. Now, everything is looking bearish right now, okay? But when do we know it's going to start looking bullish? We know when it starts looking bullish when the price action behavior starts to change. Lately, we've been breaking down support levels and back testing those levels as resistant and rejecting. We break down support levels and then we retest those levels that we broke down and then they reject. That is bearish price action behavior. So we need to see bullish price action behavior where it recaptures some lost levels. And as of right now, the last critical level that was lost was 575. If bulls want to build any momentum, if they want to spark some type of flame to get things going, they need to recapture 575. Stay above that 200 daily moving average on any drop. Recapture 575 at the very least to put those higher targets back in play. 577, 578.5, 580. Okay, 580 would be a tough resistance level. It rejected hard yesterday. So if it can clear 580, 582, and the critical fib level at 583.3 would be in play. And recapturing that level, I would favor a bounce. As of right now, Uncle Chartist is bearish. Why? Not because of Donald Trump or whatever the media is saying. I'm bearish because of what the charts are saying. So if it starts saying bullish and we start recapturing some levels, I'll switch bullish. But as of right now, as long as below 575, I'm going to remain bearish. All right? Don't get caught with your pants down, guys. All right? The market makers, they love getting people complacent, get them very comfortable to either be bullish or bearish. And when we least expect it, that's when they flip it on us. They flip the script. But we know what it looks like when the market makers want to flip the script. Right now, we are bearish. But when they start to flip the script, it usually starts 100% of the time. 100% of the time, it starts with a false breakdown setup. Okay? Don't misunderstand me now. Not every false breakdown setup leads to putting in a bottom. But every bottom, guys, started with a false breakdown setup. So my recommendation is, if you want to be bullish, if you want to go against the trend, do it tactically, do it strategically, and wait patiently for that false breakdown setup, the recapture of 575, and you play it level to level, 576.7, 578.5, 580, and leave runners. Let your runners do the heavy lifting. Let your runners go for the home run. You go for them base hits. Go for them base hits with majority of your position. Take most profits when it hit a target, and let your runners run. Okay, that's the most safest way to day trade / swing trade. Okay, so let's bring it all together, because Uncle said a lot of stuff there. Below 575, we are bearish, and Uncle does favor more downside. Above 575, Uncle would favor a relief bounce. It does not mean I am bullish, but it does mean, because I am a trader, it does mean I would favor some type of relief bounce, at least level to level, and then we'll see if the market wants to bless us with more. But 575, below it, stay bearish. 573, 571.6, and 570 are the support levels. If they fail, more downside incoming. Don't argue with the price action. But if we get above 575 and we start clearing those other resistance levels, 577, 578.5, 580, we could get a relief bounce. Guys, even in downtrends, the market tends to give bounces, okay? You guys can scroll to the left of the charts. Even in downtrends, we're looking like a bunch of uptrends right now, but even on the downtrend, there are some relief bounces, and you can make money from those relief bounces, okay? All I'm saying, let's optimize our trading opportunities by being sheep-style traders. You can still be bearish, you can still be bullish, and have your opinion on where you think the market is heading. But when it comes to the actual trading, we want to trade strategically, tactically, following the price action, no greed, no fear, just a trader in their plan and their ability to execute. That's it. All right, guys. Thank you guys so much for watching. This is Friday. Let's end the week strong. And remember, you guys are master traders. You guys are money magnets. And I am so grateful that I get to be here with y'all. Peace.